Now, the last model I just want to quickly touch on, pricing model, is the NVT price model. Now, this one here is basically a fair value estimate. Obviously, all these things are always models, they're estimates, they're never perfect. But the idea is that Bitcoin is obviously settling transaction volume. So let me just leave you with a very simple concept here. If nobody's moving money around the system, is it really worth that much? It's harder to argue that. If lots of people are moving value around the system, it's starting to show that, hey, network effect, you've got actual value being settled. So what the NVT price model, which was developed originally by Willy Woo, is one of these models where we take, in fact, we're looking at the formula here. What we're looking at is the ratio between the market cap, or more correctly, the 90-day median of the market cap, circulating supply and price, divided by the 90-day median of our transaction volume. So what we're basically saying is how big is Bitcoin and how much value is it settling? Now notice here that we're using entity adjusted data. Now this is actually really, really important because there's lots of transaction volume that occurs inside exchanges, custodians doing self-consolidation, even investors moving wallets between themselves or coins between themselves. Glassnode's entity adjusted data cleans all of that really, really nicely. So what we end up with is a really high signal. I only want to see coins that are economically meaningful. So what this particular model is doing is saying, show me all the economically meaningful transaction volume, compare it to the market cap, price times circulating supply, with a couple of medians and averages and stuff applied, and then return it to the price domain, right? So what we're doing is we're saying, what is our current, what is the relationship between those two? What is the current transaction volume, and then equate that back to the market cap, which you can obviously then derive as a price. Now we've got a 28-day in green and a 90-day here in purple. That quite often during these uptrends, let's look at 2019 and 2020, the 28-day tends to respond much faster, and when it breaks down below, it's actually a negative signal. So you've got this momentum type signal between the crossover of these two. Do we have growing transaction activity over the fast and long term? But simultaneously, they kind of relate back how much transaction activity is going on. And you can see we're only just getting the 90-day pickup, and the 28-day has only really broken above in that October rally. So what that really tells us is that there's a couple of observations. One, transaction volume hasn't yet caught up to the price. So you could argue that price may have run just a little bit too far, too fast. The other insight is that we've really only seen volume pick up from October onwards, meaning most of 2023, nobody even knew that Bitcoin was up over 100%. Very, very quiet. Kind of shows just how under the radar this year actually has been in the wake of FTX. You can really see that following October, and we've covered this over recent weeks in our capital rotation kind of focus, we've seen that it's only seen new money starting to flow back into this ecosystem after that October rally, when we broke that $30,000 level, which we spent quite a bit of time talking about.